This undictated special podcast is brought to you by Futuregrowth Asset Management. Andrew Canter from Futuregrowth is with us on the line from Cape Town. Andrew, the Argentina default has got many facets to it, but perhaps we could go back a little. Argentina doesn't have a great record in repaying its debts.
No. In fact, many emerging markets, in particular South American countries, kind of default like clockwork for the last 200 years, every 20 or 30 years. So this isn't new news. The interesting thing about this particular default is it's not really because of their financial circumstances. It's more of a technical and legal debate.
Well, perhaps just by way of a little bit of background, how did they accumulate so much debt to get themselves into a situation where they cannot repay it?
Well, I mean, this goes back to the real ramp up in the late 1990s when the banks were running around emerging markets, lending as much as they could, as fast as they could, to whomever would borrow it. It's a theme that's starting to emerge in Africa now, by the way. So by 2000, 2001, the Argentinians had over $100 billion of debt, which eventually they just couldn't service. And they did default on that debt in 2001. And they negotiated with the holders of that debt in the ensuing years, so they made some agreements in 2005 and thereafter to cut the capital outstanding on that debt by about 70%. So if they owed you $1 million in 2001, you and they agreed that they would only owe you $300,000  5 years later, and then they would service that over time. Basically, it just cut the capital required to pay back because there was no chance that it was ever going to be paid back.
And have they fulfilled those requirements?
Well, so they have. On those particular bonds, about 93% of the holders of that $100 billion of dollars of debt at the time accepted the terms, and they have serviced those terms up till now. The real challenge has been there's been what are called the holdouts or the Vulture funds, who apparently bought the remaining debt in the secondary market at pennies on the dollar. And have been suing Argentina now for going on 10 years to get back 100 cents on the dollar rather than the 30 cents on the dollar everybody else accepted. So you've got this weird situation where 93% of the creditors agreed to a discount or a haircut, if you will, and the other 7% who bought it cheap have refused and have pursued every legal avenue to get paid out rather extraordinary gains. So fast forward, of course, to today.
Yeah, and fast forward to today, and that 7% of debt is becoming an embarrassment.
Well, it's an embarrassment. It's an interesting case because you're not really sure. As a lender, as a bondholder, Futuregrowth would normally be, sanctity of law must prevail. They owed the money, they signed a contract, pay it back. You didn't make a deal with me, pay it back. But on the other hand, here you've got a couple of hedge funds and vulture funds, 4 guys in an office in New York, using the legal system to hold a sovereign state to ransom. And there's implications. If they agree to pay back these guys, they could trigger a clawback from all the other holders of the other 93%, the other $100 billion of debt. There in the settlement agreements, it said that if Argentina willingly made any agreement with any creditor to pay more than the 30 cents on the dollar, they would have to pay everybody the full amount. So this thing has enormous consequences for Argentina in legal terms.
What's the status of the legal case right now?
So Argentina actually was the default now is because they had to make a coupon payment on the restructured debt, the stuff they've been servicing, which was due on June 30th. There was a 30-day standstill period thereafter. If it wasn't paid, it was in default. They deposited that money in the Bank of New York, but the judge has said, well, you can't pay those guys because you haven't paid the holdouts, and so the money, Argentina perversely has paid the money to service the debt, but it won't be released because basically the trustee can't go against the court order not to pay it. So the legal status is standstill. They are in default on all their obligations now, not all their obligations, on the restructured debt obligations. They refuse to adhere to a U.S. court order to pay the holdouts 100 cents on the dollar, which isn't a huge amount in itself. It's all $1.5 billion, but could trigger billions of claims. And it's a sort of a standoff. And I must say, I have some sympathy for the Argentinians on this.
It sounds terribly complicated, but as you say, easy enough to get rid of the $1.5 billion, but then they expose themselves to other claims as well. Isn't there an easier way or a more elegant way of addressing this?
Well, so there probably are. If you get these guys holding the small amounts of bonds to sell their bonds for a slightly higher price rather than full face value, then you could buy them out. You could make some arrangement where they restructure that debt on a different set of terms. Otherwise, I mean, there's arrogance and ego coming into play here. The hedge fund guys have been pursuing this for 10 years. They've done everything from try and seize the president's airplane on the tarmac, I think, in Europe. They tried to seize an Argentinian naval vessel in a port in Ghana. There's a lot of ego there. And then you've got a president of a country whose people on the street are angry about this and refuse to have the nation held to ransom, saying, don't pay. It could be a real standoff, and it could last a long time. I mean, Argentina was in default from 2001-2 right up until 2005, and it took that long to negotiate a settlement. So if that's what it takes, then well, maybe that's the price they're willing to pay on the principle of the thing.
You've mentioned vulture funds a couple of times. What exactly is a vulture fund?
Well, okay, so if a company, or in this case the country, goes into default, obviously the holders of that debt, many of them must sell it because it's gone into sub-investment grade. It looks like rubbish in their portfolio, so they just dump it. They'll dump debt at 20 cents on the dollar, 10 cents on the dollar, and the hedge funds will step in and look at the legal protections and positions of those bonds, and will buy them. But they'll buy them up. They're so-called vultures. You'll see this in the property market when some property markets get really clobbered and people are panic selling. People come in and buy the dead carcasses of other people's transactions, so to speak, and try to rehabilitate them and make substantial gains. So in these cases, they're hedge fund operators. They're highly fee incentivized. The guys out there fighting are for their bonus, whereas the Argentinians are fighting for national pride and economic sustainability. It's you can hear where my bias lies.
You can indeed. But the legal system at this point in time anyway does seem to be siding with those vultures.
So it's been held. All the hearings have been held in the New York court system, which obviously is financial capital, and therefore is going to take probably a financial-sided view. The Argentinians have argued that the court system in New York has been inherently biased against them under the circumstance. They want to appeal this to the Hague. They tried to take it to the U.S. Supreme Court, who wouldn't even hear the case. They basically said, "Look, you signed a contract, pay the money." And that's the reality. Argentina has had some shocking legal advice throughout this whole process. There were no what we call collective action clauses. I mean, as you know, when a company's going to be delisted from the stock exchange, if 90% of the holders agree, the other 10% are kind of forced to come along. There is none of that in this case. The bonds were done at a time when there were no collective. For example, that's been corrected, by the way, in more recent years. There are now collective action clauses.
So, looking ahead, how do you think this is all going to play out?
Look, I think in global terms, it's a non-event. Argentina was in 2001, 2002, about over 20% of the emerging market bond index. It's now 1.3% or something of that order of magnitude. It has had no effect on markets. It is. I don't think it probably impairs the ability of Argentinian corporates to borrow to run their businesses. It probably further reduces the Argentinian sovereign's ability to access global capital markets. But I think the smart people know it's a technical default, and they're going to look closely at legal terms of newly issued debt. So I do believe it's something that's recoverable from Argentina's point of view, and I think from a global point of view, it's entertaining but a non-event.
So there isn't any implication for a sovereign like South Africa?
I don't think so. I mean, it's just, South Africa actually, in terms of looking out how it issues debt, you mentioned earlier this is confusing. Well, it is very confusing. Here's Argentinian debt issued in New York versus under U.S. law versus there's Argentinian debt issued probably in multiple jurisdictions under multiple different laws with overlapping terms and conditions. Whereas South African, sovereign debt issued outside of South Africa, there's relatively little of it. It seems to be relatively simple. It seems to have some cohesion in the legal structures, and it's limited. It's, sort of 15% of the total debt load of the country, of the government. So it's very well managed. So if anything, it makes South Africa look good in financial terms, which, by the way, relative to South America is usually the case.
But just getting back to the vulture funds, why wouldn't they take on someone like Russia, given that they've also defaulted?
Oh, this is just legal. This is just legal arbitrage. They do what they can when they can, and they really have used every legal trick that they could bring to bear to get Argentina to pay. I'm assuming that the Russian bonds just aren't so easy to negotiate against.
Maybe you can't negotiate that well in Moscow.
Perhaps they're as afraid of Putin as everybody else is. I don't know.
Probably. From the Argentinian perspective, would you, if you were advising them, tell them just to let it go? Just to ignore it?
No, I wouldn't. This is really an interesting case. This is the sovereign state of Argentina versus a couple of hedge funds. I really think, in the global court of justice, an objective view of this says, look, these guys paid 10 cents on the dollar, negotiate them out and pay them 10 cents on the dollar plus a healthy interest rate. Make a settlement, but 100 cents on the dollar plus interest accrued, with all the implications of that, if I were the president of Argentina, I would stand firm and I would not pay. If I was sitting in the high court of global justice, I would probably exercise the wisdom of Solomon. I would cut a hedge fund manager in half.
But is there any discussion? Is there any potential settlement between the parties at the moment?
Oh, I would guess that there's quite a lot of discussion going on, and the Argentinians will bring all sorts of political pressure to bear now. They're trying to claim these guys acted on inside information at various times. They're going to mount a public relations campaign. Behind hedge funds are usually clients, often pension fund money, who may not want to be associated with imperiling the health and welfare of many millions of people on the streets of Argentina. There is political pressure that can be brought to bear, and pragmatic economic pressure. So I imagine there's an ongoing discussion, and we're likely to see something at some point in the coming months.
Fascinating.
I don't think it's going to be the coming days, is the headline.
Fascinating insights on the Argentinian default with Andrew Canter. He's the Chief Investment Officer at Futuregrowth Asset Management. And this undictated special podcast was brought to you by